Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a very popular cryptocurrency, one of the most popular ones on this channel. It's the ADA Cardano chart. A lot of you have asked for an update and markets are showing a little bit more volatility recently. So let's take a look at the chart. Let's go. So we are on our website dailymarketupdate.com. You might know already that you can register here completely for free and you get access to all of these updates for tech stocks, US stocks, cryptocurrencies, the S&P 500. Today we want to take a look at the cryptocurrencies section, however, and we're going to take a look at the ADA chart, Cardano, to see, have we bottomed? Do we maybe get another high? Let's take a look at the ADA chart. First of all, on the 2-day time frame, always good to get a good idea of the overall time frame, bigger picture, context. Yeah, do we expect another high? What's going on with ADA? And current expectations are still for another high to form here on the larger time frame. Again, this is the 2-day time frame. As I said, expectations are for a third wave rally at the moment, and this third wave rally, it's more of a long-term thing. Yeah, it should be a 5-wave move itself to the upside, and it should get to $5.27, $5.87 or higher. But this is long term. We're currently at 68 cents roughly, and the market has a lot of work to do. When we talk about upside breakout points, key levels here, we're talking about the $2.51 level that on the 2-day time frame needs to be broken to the upside to unlock prices in that region up there. Obviously here, what we're doing, we're really taking a look at the chart with a bird's eye perspective, so really larger time frame perspective. Obviously there's no detail on this chart, that's why we are taking a look at the shorter time frame as well. Just a quick reminder that a third wave rally should be quite an impulsive move up. It would be comparable with what happened after 2020. However, if it's really a third wave, it should be a little larger, because the third wave is normally the longest wave in a cycle, longer than the wave one, and therefore we are tracking these standard Fibonacci extensions up there, $5.27 plus. Now, obviously, as I said, a lot of work is to be done. This here looks quite messy, not really impulsive yet. So we want to take a look at the shorter time frame now to see what does the micro count tell us and what are the relevant invalidation levels, because this analysis is not only about, okay, which direction do we go, up or down, whatever. It's more about strategically, positioning yourself and to understand what are the invalidation points, because with any analysis, whether it's, forecast is up or down, there has to be a level, like an invalidation level that tells us when the analysis, let's say, is wrong, or rather we have to change our perspective. Let's call it better like that, because we can have a certain perspective, but the market gives us a signal. If certain levels are broken, then we have to change our perspective. So looking at the bullish count here as highlighted in blue, you can see that the market seems to be in a corrective pullback labeled wave 2 in blue. And it's a very complex correction that started there in December. And we're labeling it as a so-called W, X, Y, X, Z pattern, and we're likely in the Z wave, and that's a corrective pattern to the downside, and that Z wave is likely still unfolding. So in the preferred interpretation, and we assign that a 67% likelihood, we could get another low in wave Z of 2. Invalidation point, 31 cents, so that level really needs to hold to keep the overall bullish perspective here alive. And as long as we're holding, however, above the April low, we could take the perspective the low is already in, but that's at the moment only the alternative. We would need to see a little bit more price action that would give us more confidence that this is actually what's happening, that the wave Z already bottomed here. Then we have something like a double bottom situation together with that February low. But until we see a little bit more impulsive price action to the upside, there is no evidence that this internal third wave has started, to be honest. It doesn't really look like a third wave. This would be a third of a third wave here on the shorter time frame. But with a probability of 33%, the low is already in. That would need to be further confirmed, especially with a break above the wave 1 high that formed in December at around $1.32. So that would be a good confirmation level. So we should be close to the end of that correction, but we don't have enough evidence for a low yet. We'll keep you updated, of course. As I said, if you register on the website, you will be kept informed and you get all the information. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested about further updates, then make sure you register on the website. Also subscribe to the channel, because we update cryptocurrency charts here very, very regularly as well. Thank you very much. Bye-bye.